Salman, as we're waiting for Jeremy, I wanted to ask you about your thoughts on the US dollar.
Yeah, I'd say fairly bearish given where we are today. Real rates in the US used to be solidly above their peers, but post-COVID, they've moved negative and are now comparable to other developed world rates. So that growth premium that used to support the dollar, that's just not there anymore. There he is.
Hey Jeremy, glad you could join us.
I know.
Well, actually, Salman was just making the case for a short US dollar view.
It's a long-term view, to be clear.
Longer term, I would agree with Salman. Real rates in the US.
Yep. Actually, that was Salman's point.
You have the Fed literally trying to make sure that money is cheap. On top of that, there's a secular trend of diversification away from the dollar foreign exchange reserve. It's slowly moving, but it's a major force.
Alright, so you're agreed then. Short US dollar.
Not so fast. It's good to be contrarian at times, but the short term is actually more supportive.
Yeah, it's likely we'll see periods of market stress over the next few weeks, and the dollar remains a safe haven currency, even if the source of that stress is the US.
Actually, positioning is also supportive. Shorts have already started to unwind and remain significant. If everyone is forced to unwind or cover, that could see a significant tailwind for the dollar.
Okay, so we've got some cross currents depending on the horizon. What about crosses? Which one do you think is the best to express the views then?
If you're looking for a short USD trade, actually, I think it's best taken against the Asian currencies like the Indian rupee or the Chinese yuan.
I like the long Indian rupee as well. Even though COVID cases are rising and tensions with China are concerning, the current account has been recovering and is now in surplus. Plus, you get decent carry for the vol that you bear.
I think the other strong case is the long Chinese yuan. I get the trade war risk, but at the end of the day, the Chinese economy has shown one of the strongest macro recovery post-COVID lockdown. You also get a relatively decent amount of carry, and the PBOC seems to be comfortable with the level of the currency.
For myself, I'm looking for diversifiers to my long equity exposure, and that's why I think the long Japanese yen could make sense and could be helpful. It's a cheap hedge given the rate differentials and has been very responsive to market volatility.
By and large, Asia seems to have come out of the coronavirus crisis while the West is still dealing with it and the negative sentiment. At the end of the day, I think there's a good case for Asian currencies thanks to the strong macro, good capital inflows, and fairly attractive yield differentials.
My thoughts exactly. Plus a Biden victory would actually be supportive of Asian economies and therefore their currency. Anyway guys, it was good catching up. I've got to run to a meeting. I'll catch you at the desk later. Take care.
Cheers mate.